Tesla, Nvidia, Microsoft, Meta, Apple, Amazon, Alphabet all have suffered significant drop recently. However, according to the Wyckoff method, these drops aren't surprises, and they have not finished yet. Indicators appeared even as early as the middle of last year, telling us these drops are coming. You may ask, are there anything that are the exact opposite waiting to rise? Yes, we'll find out near the end. Welcome to the Wyckoff Weekly Analysis. So this time is the first session that talk about something beyond crypto. Based on recent feedbacks for mobile users, I have adjusted the font size of the axis. These fonts are much larger, so hopefully it's easier for you to see and tell the price levels. So today's session, to start with, I'll talk about the Magnificent 7 and also some exceptions that I found, like instead of near the end of distribution cycle, they are actually near the end of accumulation cycle. So let's see how Wyckoff or how accurate Wyckoff is. Without further ado, before getting into the details, as usual, a disclaimer: these sessions are not financial advice. They are for educational and research purpose only, and obviously your discussions are very welcome, so feel free to leave a comment. So let's quickly take a look at the Magnificent 7 one by one. Let's start with Tesla in reverse of alphabetical order. So this is the weekly chart where I have put down Wyckoff phases tags. So over here we can see we're potentially within a preliminary support stage. You see these jerky actions, right? One thing you may also notice is these volume. So when we look at these bars, the volume has been continuously rising compared to like a month or two back. So this is an indication of this preliminary support phase where the volume and price gaps are higher, and we'll have to see whether, like, if Wyckoff is true or is accurate, then subsequently we may be able to see some drop in volume when the selling climax is near. So this time round for Tesla, we have seen a higher peak. However, this time the drop is much more rapid. So from the second test to where we are now, it took about 70 days roughly, because 2 weeks ago we kind of see the price at this level already. Compared to last time, from the second test to where it enters the PS period, it's around 168 days. For the, I would say, this mega distribution cycle, there are some smaller ones in between. If we take another look at the playground zones, so I've drawn two boxes here. You can see the yellow one and also the white one. The white one is basically a long-term playground zone. If you're like you have been around with my sessions, you know what they are. Basically, this is supposed to be a longer-term playground zone where the rise is mainly, you can consider it like inflation growth or like the company expansion, kind of organic growth, instead of these crazy upward motion. And the yellow box is an adjusted one. So if we look at this, you can see Tesla, basically after financial crisis, there weren't much crazy moves, right? So it's only up until somewhere near when COVID happened the price shot up basically over 10 times. If we count from the low, it's over 20 times. So that's why I've drawn the yellow box where this playground zone has been established since August 2020, and over the past 5 years, it's been trading most of the time within this zone. So except the buying climaxes or like this upthrust of the mini cycles, you can see from here, from this to this, it's roughly a year, and from here to here is almost 3 years. So 4 out of 5 years, the price is basically trading within this range. So that's why I have these two boxes here, and their importance is when the price finally comes down, if following the Wyckoff pattern, it can finish somewhere within this yellow box, one of the scenarios. If this time around for Tesla especially, because of all the political connections, whatnot, worst case, it may fall outside of the yellow box and test the white box. So this is the scenario for Tesla. So let's keep an eye on how this develops and whether we will see the selling climax soon. And then next is Nvidia. Nvidia is having a different story. So Tesla has a much sharper drop. Nvidia has just finished its upthrust, and then we see a couple of last point of supply that happened. So here you see a pale blue line or sky blue line that's around $90, and you can see a bounce from that level over this week. This I have extended from the PSY level as well as the automatic reaction where it tested this level August last year. So as of this moment, this is a relatively solid support compared to the automatic response and the sign of weakness that happened sometime between August and September last year. However, given the generative AI fad is probably kind of dying out, I think, even though there are a lot of memes generated just recently. However, the use case and the wide adoption of generative AI is still a big question. So not to mention there are other alternatives that requires probably less computing power than expected before. If this really comes down, the price really comes down according to the Wyckoff method, we are not seeing the preliminary support yet. I guess we'll be able to see it pretty soon. So when that comes down, the next support level, or like more solid support level, would be around $45, the second blue line. So this line is where the sign of strength and the last point of support was back in 2023. So almost 2 years ago now. And a very significant thing you can see over the past 7 weeks, the first time the price fell outside of this pink box, this is an upward playground zone if you're new to my sessions, it was January 27th. However, it rebounded back to within the box in early February. However, over the past 3-4 weeks, it eventually it's pretty much confirmed that it has fallen outside of the upward playground zone. So this channel is basically kind of completed. If you're into candlesticks pattern analysis, this upward flag basically, and then we see this bearish. It is a bearish pattern, and we see these bearish moves now. So eventually, once is poked through the first blue line, that the second one is where the next key price level would be. If we look at the price levels over here, during the 21-22 distribution cycle as well as 22-23 accumulation cycle, if people argue that like money printing, that kind of reason, that doesn't sound here, because money printing started since global financial crisis, and then the printing machine kept printing all the way to COVID. And so over this period, if we look at 2020 to 2020, like mid 2021, that's probably, or even if we look into here till end of 2022, that period has pretty much absorbed that kind of saying, right? That should be factored in by the market already. However, we still see in 2022 to 2023, the price was still somewhere near or around the white box, the long-term playground zone. So what I'm trying to say is, if this really drops badly, the worst case scenario can be somewhere touching the white box, or even fallen within the white box, because nobody knows how bad the market would be given all the tariffs and stuff going on. The worst thing is uncertainty, actually. If like everything is set in stone, all the dust settled, that won't be the sharpest drop in market in terms of time. It's usually at this moment where chaos just started and people are panicking, and like a lot of uncertainties going on what's going to happen next. That's the worst part of timing. So that's for Nvidia. We'll see how quickly it falls back to an accumulation cycle. Then Microsoft, if we look at Wyckoff analysis, it has gone somewhere similar to Nvidia we see just now. It's near the PSY level. So again, I have one blue line here at around 338, 340. So it is a range. It's not exactly just one particular price, and it's like it's going down to test this level as like a first stop, and then if it really goes further, this second line here, 215 roughly, basically is an extension from the PSY period in 2020-21, also the bottom of the accumulation cycle in 2022-23. That's where I've drawn the line. So one is the PSY as well as the buying climax of last cycle in 2021. The second line is the PSY of the 2020-21 cycle, distribution cycle, as well as the 2022-23 accumulation cycle. So these are the two major price levels. If we look at the playground zone, the pink one extended from all the way back to 2016, when the price started to deviate exponentially from the long-term trend since roughly the 90s. So This one, so far, Microsoft is still within this trend. You may say, fortunately, it's not that it hasn't tested the bottom, and it may test the bottom of this box as well. And if it falls through, that's when it's going to test the second blue line next. So according to the current trajectory, it's probably sometime around, depending on how quickly it falls, right? It may be like sometime end of this month or all the way to July, August, that it will touch the bottom of the pink box, and that's the real test, whether it's going to fall outside of this upward trend or the upward flag in terms of candlestick patterns, and then come back to where the kind of normal trajectory used to be. Hopefully it's not too bad for whoever is holding Microsoft stocks. And next is Meta. Meta, very sharp drop, we can see, right? And it actually kind of touches the blue line, first blue line, that's extended from where the buying climax and second test was. So it's more like the center line of the trading zone during that period. Right now it seems to have found a little bit of support at that level at around $500, $490 to $500. However, you may also notice immediately that it has also fallen outside of this upward trading range or playground zone, depending on whether or how you like to call this, and also an upward flag as well. So once this has broken through, well, there would be rebound. We have seen from earlier charts that, like, dropping from the up thrust, there may be some rebound, having some LPSYs, the last point of supply, and then eventually finish the entire distribution cycle, and then starts another accumulation cycle, right? That's one scenario. It may go as low as the second blue line, where it's drawn by extending from the last buying climax and secondary test, and also the PSY, the top of the PSY, to where it is now that we are seeing. Or it's not surprising for it to fall within or back to the white box, the long-term playground zone, right? So this one basically comes all the way since like 2012, yeah. It's only during the period of 2020 to 2021, I would say, because 22 it's already falling back to that area. So it's not for too long it has deviated from this long-term trend. So depending on how bad it is this time, after falling through the first line, if it takes a little longer, you see this second blue line is already crossing the upward long-term playground zone. So let's say, hypothetically, if it really touches the very bottom, let's not talk about something like this, that it poked all the way through the long-term playground zone. If it's just touching somewhere around here, that's probably around 220 to somewhere around 300. That could be the range for a pretty bad scenario. Whether it would have an upthrust after distribution, it's kind of likely given all the things happening around the world. So it's could be like of higher possibility that the next trading range would be between these two blue lines, like around 350 to somewhere around 500. So let's see how quick quickly or whether it will come down to this zone soon without like having an LPSY. Obviously, it can come like bounce between this pink box and the blue line first. The bottom of the pink box and the blue line, it can do that before eventually come down to the next price level, somewhere like this. So let's see how the market treats Meta. And next, Apple. Apple very long bar down and stopped right at the boundary of the upward playground zone or the upward flag in terms of candlesticks terminology, right? Here we can see it's also finished its upthrust and then demonstrated to LPSY already. Let me take a sip of water. And then now that it kind of find a little bit of support, the next support level would be somewhere around 170. So this first blue line that's extended from like these buying climax and secondary tests and also the low of the PSY. And the next level down would be somewhere around mid 140. That's this BC trading range, roughly the center of this BC trading range of the accumulation cycle as well as the distribution cycle that happened somewhere between 2021 to 2023. Yeah. For Apple, whether it would be going all the way back to the long-term playground zone, the white one, I won't say there's zero chance. I won't say there's zero chance. There's always a chance that for a stock to return to its long-term level. So it really depends on how the market reacts, right? In terms of volume, it's kind of rising over the past few days. We'll see whether it will go all the way like as high as June or September last year, but like instead of buying, people are selling. So if that happens, that can certainly go deeper. And beyond these two lines, the third one would probably be somewhere at this PSY level around 110, 120. So these would be the third price level, I would say, if it really goes down. If it's that bad that it goes even beyond this, then it will be the white box, because there's like not as solid support as where we've seen over here. These frequent trading patterns, it's very scarce over here. So that would be the long term. So the bottom edge of this box would be somewhere around 60. If it takes like half a year or like half to 6 to 12 months, let's put it this way, to develop that. The worst case, one of the worst case scenario would be around 60. Not sure that makes sense to you. That may not be the case. Hopefully it won't be, especially for those holding Apple stocks. However, never say never. And then Amazon. Amazon, you can see it has fallen outside of the pink box, the short-term playground zone or the upward flag, and has just entered the yellow box. The yellow box is not the longest term playground zone. It's I would say something that since the price has deviated from the long-term trajectory since 2007 to 2015 roughly. So it has a different slope basically since 2015. That's why I've drawn a deviated path from there, and then based on the peaks that happened like somewhere in 2018 and 2022 that combined to form this box. So the first stop, according to this, if this is like eventually confirmed like a solid support, given all these lows forming the strong line at the bottom of the yellow box, this would be somewhere around $140 maybe, depending on how quickly it drops, right? So it can be somewhere between 140 to 150. And then if defending this line fails, it happened in 2023. It's not that it hasn't happened before. Like October 2022 to May 2023, it has, or the price has actually fallen outside the yellow box as well. That's when it started the current upward trajectory. If it really falls outside of the yellow box, then the support line would be somewhere around $100. So where does this 100 comes from? One, it's a very strong psychological number. Second, if we look at this accumulation cycle that happened in 2022-2023, that's somewhere around the top of that accumulation cycle, right below the SOS, the sign of strength. And also these multiple peaks that happened back in 2018, 2019, and even in early 2020, where the PSY of that distribution cycle happened. So supposedly this 100 should be a pretty strong support line before it goes and tests like somewhere around here, around 80, and then all the way down to the long-term playground from the white box, somewhere between 40 to 50. That's probably the worst scenario, right? So finally, Alphabet. Actually, not finally. We've got two exceptions that I'm going to show you. So again, fallen outside of the pink box over the past 4 weeks. 4 weeks ago, early March, it was still able to defend and stay within this upward flag. Now it has fallen below the upward flag and like fulfilling the textbook explanation of candlestick patterns. And it has also shown like an LPSY according to the Wyckoff method. I've put an initial tag of sign of weakness over here. It may not form such a phase. It can fall all the way down without having a little bit of rebound. But let's keep it here, and when the rebound happens, I'll adjust this tag along. So in terms of support level, as of this moment, like 147, roughly 150, it's one of the support levels because look at this PSY and also the automatic reaction, right? And also the buying climax and upthrust and the multiple LPSY from the distribution cycle back in 2021-22. So like theoretically and actually when we look at this price action, this should be a support level and like relatively solid. And then the next would be somewhere at the low of this like backup or LPS, like right after the sign of strength of the accumulation cycle, and also the LPSY of the previous cycle and PSY range as well. So after 147, 150, this 120 would be somewhere around 120. Remember, it's not always, it won't be an exact number. It's always a range. So it will touch this area. So interestingly, Here we can see the blue line crossing the white box, right? Crossing the long-term playground zone. And when that happens, if the market is really, really pessimistic, then it may test somewhere below 100. So we can see there's somewhere around 90, or even like somewhere between 80 to 90. Let's put it this way. It was the level that happened in late 2022 to early 2023 when the accumulation cycle was happening. So this time around, assuming the long-term trajectory still holds, there's still a chance that it touches that level. You see this dotted line, right, where it crosses the bottom of the white box. So that's still at par with the bottom of the accumulation cycle back then. So be careful of what coming next, yeah. So that's Magnificent Seven. How about like the exceptions, right? So let's come to them. So this is the TLT. It's the 20+ year Treasury bond ETF, like the US Treasury bond. Not just this, I'll come to that in the second example, but let's focus on this one first. So during the period of 2019 all the way to somewhere here, on 2021, it had one distribution cycle, and then after a short period of accumulation, roughly 2 months, 3 months, it has another distribution cycle. So that's between 2019 to 2022. And then eventually we start to see the accumulation, or the mega accumulation cycle that happened for 3 years, over 1,000 days. As of this moment, it's still staying at the lower half of the long-term playground zone. So you see from the period of 2002 all the way to 2011, most of the time the price was around this area. So even, or like only during the time immediately after global financial crisis, that it spiked up quite a bit, and then it eventually returns. And then starting from 2012, it started to go crazier, but not too far from the 2009 peak, and then returns to a more reasonable level for accumulation. And then the crazy spikes, we see like one top higher than the other. You can say it's all because of money printing or the low interest rates, and because of the interest rates hike, that's why the price has fallen deeply. Well, and also obviously a lot of those tech stocks and other assets has appreciated as well. That has attracted a lot of money and attention away from the treasury bonds, right? And now, if we look at the Wyckoff method, if today Wyckoff method is still applicable, we are seeing, like, we have already seen the spring, and the sign of strength is like one higher than the other. It may be signaling that there may be a climb coming, similar to these phases after accumulation. A hike will happen. However, it's not always a big hike. There were instances where it or small hike, depending on the price levels, obviously, right? So this is the US. And what about the others, right? If we look at this, the Canadian government bond index, right? It's showing similar pattern. I can also find Wyckoff accumulation pattern here, and it also has passed the spring stage and establishing higher lows. And more interestingly, we can see this ascending triangle here. If you're in the candlesticks pattern, this means a bullish sign. Hopefully, all these textbooks knowledge are still valid. If that's true, then we will be seeing some kind of upward movement pretty soon. So these are the only two that I'm showing, but that they are not the only two in the market. So if you look at other assets, or even depending on where you come from, your local government bonds, you may be able to see similar accumulation patterns. However, for bonds, very key is you have to look at the quality of the bond themselves, right? If it's a country, it may be tied to economic factors like GDP, GDP per capita, like foreign debt, all those kinds of things. If it's company bonds, the company outlook, especially given all these tariffs and trade wars going on, and also be careful with the mega earthquakes that are looming around. So over the past week or two, even just today, there are earthquakes going on around the world, and all these tectonic plates are kind of connected. So when they are shaking, basically, the energy propagates, and it's like this chart, right? So these days, different locations around the world has earthquake happened, and then the shake just passed on to somewhere on a different part of the planet that we're living on, right? So be careful when that hits, in particular to some key markets. That's going to make the situation even worse on top of the trade war. So that's it for the very first non-crypto session. Hope you like it. Let me know in the comment. See you next in the regular